please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
However, the bad news continues on the macro front. Goldman Sachs has downgraded India to market weight from overweight, and they've changed their stance on India after being bullish on it since 2014. Nimesh is here with details of that report. Nimesh, what's the rationale behind this downgrade?
Goldman Sachs was having an overweight stance on India ever since 2014, and only now they feel like the risk reward is not favorable, and they've cut the weight to market weight or so to speak a neutral weight from overweight. As I said, they basically feel that the risk reward is not favorable, essentially because of elevated valuations, potential slowdown in terms of economic activities, and the election concern as well. Remember, we'll have at least 3 state elections and a general election in the next 12 months. So that's something which has started to playing out in the minds of the investors as well. And typically, India's premium to the MSCI EM has now crossed 58%. And typically, if that happens over the next 3 to 6 months from then on, India tends to underperform. So that again is the reason why they feel in the near term there are headwinds for Indian markets not to outperform. In terms of sectors, surprisingly they've upgraded I2 to an overweight. They remain neutral or market weight on pharma. In terms of other sectors, they continue to be overweight on private banks and metals, but they've dramatically cut down their weightages on industrials and auto stocks from overweight to market weight. So essentially, they have a Nifty target of 12,000, which means a further upside from here on. But from being overweight for last 3-4 years now after hefty valuations and the fact that India market currently commands a huge premium to the MSCI EM, they feel that India will really underperform, and that's why they've cut from overweight to market weight at this point in time.
Okay, so double whammy of slowdown in growth on one hand and the upcoming elections which could curtail spending on the other hand. That's the reason for the downgrade coming in. But ahead of the 2-day JP Morgan India conference, which begins in New Delhi from the 19th, we caught up with the top brass, Sajid Chinoy, Bharat Iyer and Kalpana Morparia, to know what they have made of the macros and the micros, the weakening rupee et al. Here's a quick snippet of that interesting conversation.
Over the last 48 hours, all EM currencies are lower. Asian currencies, many of whom are current account surplus economies, are also weaker today. So India is simply mirroring that effect. Maybe over the last 10 days, we've occasionally seen signs of that. Exporters are not hedging, importers are front-loading. So there are things that policymakers can do to reverse those expectations. My sense is what you saw over the weekend was just a start. There was a clear commitment to staying on the fiscal costs. There was a belief that we've got a big battery of measures we can introduce. Let's not bring out the bazooka right now because it's too premature and not necessary. So I think we should just take a deep breath. In a world which is worrisome, India's fundamentals ultimately will shine through. Inflation is running below 5% in India. The current account deficit is, yes, high at 3%, but not at 5% like 2013. And we've seen the biggest improvement in our twin deficits in the last 5 years. So when the dust settles, markets too tend to be more discriminating. And I think we have to hope for that we are not one of those fragile economies. There are many other examples right now.
If you look at consumption-related sectors or even consumption proxies like, the retail banks, for example, they are beginning to come off the twin disruption caused by demonetization and GST implementation. They are feeling good about earnings. Between August and January this year, yields had already gone up, 140, 150 basis points. So, the twin vulnerabilities of higher oil prices and higher cost of capital was already beginning to play out. So, that was the smarter thing to have done, and we've done it. Structurally, India is still one of the best emerging markets out there, be it in terms of the medium-term growth profile that we have. The depreciation in the rupee within an extent is actually par for the course. And actually, corporate India is not going to fret too much because we have to appreciate that we need a competitive currency not only to boost exports, but also to protect our domestic industrial complex from imports. I mean, look at the number of industries which have asked for protection in the last 2 years. Steel, carbon black, tires, rubber, I could go on. So, quite a few of them would actually, welcome, the rupee depreciation within nominal levels.
Other than the power sector, which I know is a challenge, and there are varying estimates in terms of whether the haircut is going to be 70% or 60% or maybe even lower. So, other than that, if you look at the way the entire metal sector has behaved, frankly, it's taken all of us by surprise in terms of the recovery. I think the way the Reserve Bank of India actually choreographed this entire thing is pretty admirable.
Okay, well, let's drill it down to individual stocks then. Enough of the macros. Let's talk about Manappuram Finance. That stock is under quite a bit of pressure today. It's trading at a fresh 52-week low. If you're wondering why, Abhishek is here to tell us more on that. Abhishek.
RBI has rejected Manappuram's acquisition that they wanted to do in Indian School of Finance. So, Indian School Finance Company. So, they wanted to acquire about 85.4%, which they had announced way back in June, July. So, RBI has sent a letter to ISFC on 12th of September. The reason cited by RBI was that the change in shareholding and the change in management is not going down too well with them. However, ISFC had sought time with RBI and they will present their side of the view to RBI, and let's see how the outcome pans out. Back to you.
Okay, so that's the reason why Manappuram Finance is under pressure. But moving on to the pharma space, Glenmark is in the news again as the US FDA has begun inspection at the company's Buddy facility today. Ekta joins in now with those exclusive details. Ekta.
Well, yes, it's been a spate of US FDA inspections that we've seen for a couple of companies. So it started with Sun Pharma's Halol facility, then the Mohali facility, and now it is Glenmark's Buddy facility. We do understand that it is a US FDA inspection which has begun today itself at the company's Buddy facility. It is expected to be a product-specific inspection, or a PAI, which means that it is an inspection which takes place by the US FDA before they give their go-ahead to a particular product that the company has applied for in the US. Now, it is expected to be a PAI, but it was expected to be a short notice PAI. That means that the company was aware that the US FDA could come anytime, but the notice given by the US FDA in order to start this inspection was quite short in terms of duration. Remember, Buddy, as of now, contributes around 10% of their total US sales, so it is significant in terms of a manufacturing facility. It has quite a few filings from the dermatology space, I understand, from that particular facility.